What is going on, everybody? Welcome back to another video. In this video we are going to show you how to get a 10% return on your money minimum a year, and how you can do it with very little amounts of money, and how it's actually easier to do this when you start small and then it will get harder over time, but how it's very possible. So with that being said, let's go on ahead, cue the intro, and jump right into this thing.
I know I'm fine, but the money makes me.
Okay, guys, again, a lot of people with a lot of money, they don't ask a ton of questions. They've already got the game figured out. But what I do like about society is once they learn, like, you've done something or things like that, they start to ask questions, and they become curious. They're like, oh, well, he did it, why can't I do it? And I think that's the biggest thing that I really love about America and people that have came to America, is they're not just, oh, that's over there, they leave it alone. In this video right here, we're getting ready to show you is just a way that you can get a 10% return on your money fairly quickly. There is some risk, and we're going to go over that as well. Remember that these are not recommendations. These are just options to be able to trade and to be able to invest and to be able to make some money on your money with a very high probability. That's the main thing, a very high probability. Now, I have the S&P 500 SPY up, the ETF. So we want to look at the max. The max, as you guys can always see, it goes up and to the right. So this is an asset that I do love to have in my portfolio, whether I'm just selling options, holding the stock, such and such. There's all sorts of things that you can actually do with this, and people don't know about it. So the first thing I'm going to show you is, for those of you that have under $500, you can do this even with $100. It's not recommended, but you can get moving with it. So I'm going to show you to be able to do this, and the first thing you're going to have to do is you're going to have options trading in order to do that. So for those of you that don't have a ton of options, so just trade spot, or don't have a ton of money, this is how I started doing this and how I learned how to sell options. Now I sell them naked. We're not going to go over that in this video, but I sold credit spreads until I learned and I got comfortable with it. And I think that's the main thing that people don't understand is go in small, learn it, understand what you're looking at and what you're investing in, and then be able to move to some other things, go to some different asset classes, go to oil, go to gold maybe. That's what I've done over the past now. I live in Houston, so oil is a huge thing here. I never invested into oil until I got here, and now I trade some commodities and futures trades that have actually done very well. By themselves, the money that I allocated over there has done I think it's over 20% already, and we're only 6 months into it this year. So again, first thing we're going to do is, I would say it to be a minimum of 5 days out. I don't love 5 days for this trading strategy that I'm getting ready to show you. The main thing is because it involves more risk. One thing you can remember is more time is going to equal less risk, especially if you're bullish on the overall market. So one thing I like to do is I like to go to that 45 day, anywhere around the closest one. Here's a 41 day. And just so you guys know, I have this chart up here for SPY, so we can look at it and we're going to be able to do some things. So this is what's called an options chain, and we're going to get to where the price is. So here, but the first thing we want to do is, we are bullish on SPY. Always. I don't bet against SPY. It's like my golden rule of investing and trading is I don't bet against SPY. Now, I have bought puts, protective puts against it, but I do not bet against it. So what I'm going to do is I'm going to go to sell, and I'm going to go to a put. Now, how far do we want to go out? You see a probability, a chance of profit, and it gets higher the further you go down here. Now, the SPY is at all-time highs, so I'm going to go to about an 85 to 90. So this is 533. I'm going to open that up. I want to draw a line. This is what it was, 533. Yeah. So you're going to be able to get out here a little bit in time. We'll mark it there. So what we're doing is we are going to sell an option, and delta, basically the probability of it going in the money. It's a 15 delta, and that's about right, 85.41. Now you're sitting here looking at it going, I don't have that kind of money. I can't do that to make $213. You don't have to. We're going to turn around and we're going to buy a cheaper one and create what they call a spread. I think this is very important So if you have a little bit of money, you can go here. Look, this is your max loss is $90. Your max profit is $10. That is a 10% return on your money in 41 days. There's your math right there, especially if you're bullish on SPY. Boom, right there it is. You're making what people make on average a year in it. Now, I'm not going to do that because I don't really like that one. I would probably come down here. I'm going to get probably, this is a little bit wider than I'd probably want, 530, but probably right around there, that $5 to $10 range on a spread. And now look, I'm going to gain almost $30, but my max loss is $271. Now that's a better return on my money, and I'm actually going to see the theta, which is the theta decay, the amount an option decays, is actually going to work really, really well for me over time. So what we just did here, I want to show you this on a graph. So the stock is up here. As long as in 41 days the stock is above this blue line, we get to keep all $29. Or technically you're probably looking at $26 is what you're looking at. The credit is $26. So $26, and you're only risking, let's say, we'll round up to $300. So it's not as good as a return a little bit there, but if you do this over and over and over throughout the year, you do get a great return on your money. Now, this is how I started selling options. Now, you can do this on the call way as well. I don't personally. I would rather stay just bullish on the market, and it's worked out over a long period of time for me. Again, and as you will notice, is if you sell on a red day, you will get a better pricing and you will get further out of the money. So for instance, if yesterday, Friday, would have been a red day and we didn't go to all-time highs, you probably could have taken this 533 and gotten the same amount of credit, but gotten it at like 527, 526, 525, because it would have pushed it out further. And that's the great thing about options, just knowing when and how you can really, when the market downturns, but you're still bullish on it, you can really capitalize on these and make a lot more money by selling options into those times, knowing that it's going to more than likely, your probability is that it's going to bounce back and you're going to make that money faster. And a lot of times, guys, you don't have to wait 41 days. A lot of times I get to about that 20-day mark and I'm at 50%, and I will take it off. I'll take $15 out of this for risking $300 and making $15, but in a shorter time frame. Then I can go out and do another one. Then you get a compound effect, and that's where a lot of people can make a lot of money rather quickly. And instead of putting, I know guys that do this $100 at a time, and then they get up to that 500, then they do $500 at a time, and then now instead of making their dividend, a check that they were getting very, very small from the S&P 500 was maybe a couple dollars a quarter. Well, now they're supplementing this because they're making more money every month than they were, having the S&P 500 go up in value, and now they're buying other stocks with the credit that they are receiving. And that's exactly what I teach all the people that I have with me, that I have mentored over the years, and that I have worked with. I take the money that we get in credit. Of course, you got to pay your taxes, blah, blah, blah. I'm not a CPA, not a certified accountant, none of that. Get one. I highly recommend it once you start making money. But then I take that money and then I go buy other stocks. I have bought Coca-Cola. I bought Southern Company. I have bought Oxy now that I'm in some oil. I have bought a stock called PTY that pays me dividends. I'm big on dividend stocks as well. But when I'm looking for my income that I don't want to live off of it, I want to continue to grow my portfolio other than the money that I'm putting into it, that's what I do, guys. And this is just a very, very simple strategy. Again, you can get a little bit more here. You're risking $200 and you're making $17. So you're still almost at a 10% return on money. You're a little under that, so maybe 8% here. But again, remember what the S&P only averages. They say 12%. I think it's more roughly around 10% if they've done everything. If you look at it anyway, 10 to 12%. Who cares? We'll round it up to 15. We're still going to make more if we continuously do this throughout the year. You're more than likely going to double your portfolio, or you're going to make 50% returns on that. You just got to do the math on your own and how much is your risk. And again, if you're not risky, the other one I want to show you is here is we will just show you a 10 delta, which is a 10% probability, which is what I like to have beginners do. And again, we're just going to go back here. We're going to buy one. And you'll see you're not going to get that sweet return. You can get $9 for $200, but a 523, you're getting so much further out, and that's where it really helps. So now you're getting that much further out. So as long as it stays above that line, you are making money. And that's what matters. As long as it expires useless, you get to collect all the credit, and then you get to go and do another one. So that being said, guys, thank you guys all for watching this video. I hope this helps somebody else out there. And if you have any comments or questions at all, feel free to leave them below, and I will answer them all. Thank you guys, and I'll see you guys in the next one.